Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. We got quite a bit of economic news releases scheduled for today, so we're going to jump right into it so you guys can start your day. We got the weekly jobless claims, and last week we had 389,000 people applying for unemployment. This week they were projecting about 385, and just decline of about 2,000. So we're still a little high, 387. Still not 400,000 as we were saying around last fall, but still relatively high. Next item to note is the Philly Fed, which is the manufacturing in the Philadelphia region. So back in May, we had a negative, some contraction at 5.8 below. We figured kind of bring it up to about zero, so it'd be par, but actually it contracted a lot further. So not too good economic data coming out of the eastern region, at least out of Philadelphia, where manufacturing is concerned. Next item to note is existing home sales for May. And in May, or April rather, we had 4.62 million homes that were still on the market for sale. And we figured that come down a little bit and actually dropped down to 4.55 million in May. So we had a pretty big slowdown there if you factor that was almost 100,000 jobs, or I mean 100,000 homes basically basically tells you that we have a lot lower inventory that's out on the market right now. Leading indicators for May, we had a contraction back in April, and we figured it would kind of come up a little bit, and this was actually good. Leading indicators basically are showing us that we're still growing at a modest pace. This takes in about index of about 10 different areas to kind of show you, to kind of factor in that there might be some seasonality and stuff like that. So this is a pretty good indicator as to where the economy is going. So this one's showing that we're having some modest growth, that there is some job growth challenges there. But this is kind of expected when we're seeing Europe and China, everybody else slowing around. We can't expect it to grow when everybody else around us. We're just too intermingled globally that we will expect probably some type of slowdown here. But how much of a slowdown, that's going to be the question. So we'll start off with the next item here. This is the last item for economic news. We got the FHFA home prices for April, and we had a 1.8 back in March. Increase, and for April it jumped up to 0.8%. So still not bad. Home prices are still showing some growth right there, so going up a little bit, better than obviously the negative. Now we'll jump over to the headline news, see what's going on over there. We show the stock market's down a bit. Probably after yesterday we had the Fed speak yesterday. Basically, the Fed did not give any indication of kind of easing. He's going to continue the same path. Still saying that the economy is growing at a modest pace. There's some volatility in the market, but he's still maintaining where the previous stance. So right now we're just kind of correcting from yesterday. We were up a little bit yesterday, but now we're kind of correcting. Many times you'll see that where the market kind of react one way and then almost reverses the next day. Today there was also an audit report on Spanish Bank showing some recapitalization is needed. I don't think there's any surprise there. There's been questioned all along. I think some reports are looking about, I think 65 or 465, forget the number, billion euros. And then there's also another report that I thought was kind of interesting. Moody's possibly downgrading UK banks. So, you always thought the UK being pretty strong here, kind of weathering the storm here, but it looks like there might be some Moody's might be downgrading their banks over there. So let's jump over the interest rates, see what the bond market's doing today. And we saw that big drop as we saw right below the 10-day moving average. And right now today we're kind of getting those losses right back. So we're kind of, if we notice last week we had that opening gap. That opening gap is closed. We still haven't opened up this one. At some point this will probably close. So we'll be probably testing the 104, 41, 1060 range. So at some point this will probably close. It could be a while. We do have economic data kind of showing that will support the higher levels here. But right now we're about the same where we began the day yesterday. Obviously we had some price corrections to the worse later in the day yesterday, but we pretty much got those back today, so we're pretty much at the same levels where we left off yesterday. So interest rates are unchanged from yesterday morning, but an improvement from yesterday afternoon. Is how I would describe today's rates. So you guys have a wonderful day, and I will see you guys tomorrow. And thanks for listening and your support. If you want to continue to support, please stop on by mikesdailymarketreport.com and subscribe.